Hello, everyone. Welcome to another episode of The Clueless Capitalist, where we discover interesting startups, interview founders, and help you become less clueless with angel investing. My name is Rozee.
And my name is Osman. Welcome to The Clueless Capitalists.
In this episode, we are going to be speaking to Dukan. Dukan is a digital commerce, payments, and lending ecosystem for micro SMEs and their supply chains in Pakistan. Joining us is the CEO and co-founder of Dukan, Monis. Welcome to the episode, Monis.
Thank you, Rozee. Thank you, Osman. It's great to be here.
So what we're going to start with is your pitch deck. You can bring us to the pitch deck and then we'll ask you questions afterwards.
Dukan services the SMEs of the world, and the global GDP is about $90 trillion, and of that, SMEs contribute about 50% of that. So about $45 trillion is represented by SMEs. SMEs in emerging markets aren't growing. And the reason they're not growing is because they don't have access to credit. And the reason they don't have access to credit is because they're operating in an informal economy and banks basically don't know how to lend to them. The amounts of loans that they need are fairly small, which means it's a lot of work. And as a consequence, we are leaving behind probably the most important sector of our global economy, which is the growth sector, where all the employment happens. These SMEs grow, they become, larger organizations, and they move from the small to the mid into the large. So what Dukan does is we create a digital banking and e-commerce infrastructure for SMEs, connecting them to their supply chains and embedding financial services. And through this, we collect digital footprints through which we're able to lend at the time of need. It's a very complex ecosystem. We've been building this for about 3 years. We're live now with Ant Financial in Pakistan, EasyPesa, and now we're taking this entire stack to various other places, including all over Africa and the Philippines. There's tremendous appetite. So, try to zoom in on the problem. It's a very complex problem, and that's why it took a long time to build. Our whole philosophy is that if you're going to lend to SMEs, you need reliable data. You need confidence to be able to extend money. How much do you give? What do you give for? How do you make sure that you get repaid? And it's this uncertainty that's driving a lot of banks now to start to explore how to give these loans because they don't know how to do it. If you look at this SME sort of ecosystem, it starts at the top. I'll talk about this in terms of a supplier and a seller. Suppliers could be large manufacturers like Unilever and BAT, who is working with us on the ground, is already on our stack with EasyPesa. They produce goods. Those goods are distributed through a distribution network, often very informal, on the street. They have master distributors, they have sub-distributors. The distributors have, warehouses, they have inventory they need to keep track of, they have a storekeeper. They've got these guys that go around the field called order bookers. This structure I'm describing is not unique to Pakistan. You'll see the same thing in India, in Sri Lanka, in Bangladesh, in South Africa, in Ghana, in the Philippines. I can go on and on and on. It's almost an identical structure, and it's largely informal. So the distributors basically have these guys called order bookers who go out on the field and go along a fixed route of stores, because fuel is a big issue. So the stores need to be near each other. When they go on that route, they collect orders from those retail stores. And when they get those orders from the retail stores, they scribble it on the back of a napkin. They go back to the warehouse at the end of the day. There's a guy there called a storekeeper. He takes that. The key punch operator enters it into some Excel or homemade software. Then they figure out if they have the inventory. Then the storekeeper creates boxes for each route with all the supplies that are needed. The next day, a delivery guy goes and he goes and hands those items. He collects cash, he collects credit, he collects those expired items or like returned items. This is all happening manually on the back of trucks. So it's a very paperful process, and the distributor often has to extend credit because a lot of the shops don't have the ability to pay right now. They get the money after they sell because they get a margin of, let's say, 8%. So they buy goods for a certain amount of money, and when they sell it, they get 8% on top, and they're able to repay the principal. It's an offline process. So this is one vertical. So we've built a whole vertical ERP that has a piece for the manufacturer, for the sort of distribution network, and the stores. So stores, I'll just walk you through this one maybe a bit clearer here. So what we've gone live with right now with EasyPesa as an example is we've built a super app for them. It's co-branded, it's white label, it's our platform. We're not a vendor, we're a partner. We get annuity, we get a revenue share in everything that's going on. But to sort of explain this to you in a simple way, we've built a super app for retailers for EasyPesa. It's basically the Karobar app, a business app. And so all of their retailers now get this app, which has a wallet embedded inside it, which they can put cash in, they can take cash out. They also get credit scored. And the way they get credit scored is we sign up the distributors. We go to the manufacturers like Unilever, for example, or BAT in our case. They give us distributors. We bring the distributors on our DMS SaaS, our vertical ERP I just spoke about, which is a digital process for this entire thing. We give apps to the order bookers. We give them a SaaS for their inventory management, for the storekeepers, the delivery, the returns. All of that's happening now online. So they're very grateful for this software because it gives them tremendous efficiency. And now these retailers are able to self-order through this app because the distributors who are connected to them, their products appear. We do a lot more things in the app. It's a super app, so they can sell airtime, they can sell bill payments and all these sort of other items, virtual goods. But in essence, when they start ordering now from their distributor, the distributor saves money because he doesn't have to have an order booker go all the way out, but the orders land in the same software that they would end up with if the order booker went with the app that we gave the order booker. As these transactions are happening, we're credit scoring this retailer. We're seeing how much this retailer is buying, what sort of inventory they're buying, how often. And once you establish a sort of a record for this, it's very, very easy to score. And this was the learning that I got on the previous startup that I did called Finja. Finja was the first EMI to get approval from our SPP, our state bank, our regulator. We gave supply chain loans, basically scoring on the back of spreadsheets. And so we figured out how to give these loans very reliably. We saw we had a default rate of less than 3%. So the Dukan stack puts all of that in a digital footprint, both for the merchant and the distributor. And the payments are paid from wallet to wallet. So we have a wallet for the distributor. So it's a fintech at its core. And that payment is then sent to the wallet of a distributor. So we've got the trail of payments. We've got the basket that was ordered, how often it's been ordered. There's a KYC that's implicit for the retailer, knowing who the retailer is, that he's actually real, he's been there. And so as these transactions are flying, we're credit scoring them. We've got this credit scoring module, which we share with a lending partner, and we plug it directly into the lending management system of the bank or the financial partner, which uses that credit score to real time, at the time the order is made, disperse the loan to the distributor. So the purchase is made by the retailer, but when the purchase is made, the payment is made from our financial partner directly to the distributor. So as far as the retailer is concerned, the payment's been made. We collect the payment through the wallet of the retailer because we also have that. So the loan is recollected. So, for example, a retailer will buy a few items for $100, flip them for $108 like 3 days later, make a profit of 8%. And the lending amount that we give them 4% for the month. So they're able to revolve that 3-4 times, in a month. So they're making like 24% and they're paying a capital cost of 4%. So they're making about 20% on the back of cash that they don't have. And it's a very, very good loan because the money isn't going in the hands of the retailer. It's going for something that he's sold for the last few months. You know how much he can sell. And now all of a sudden this SME starts to grow because banks were afraid to make a bet on them because they're informal. And you repeat this for, we got BAT, Unilever, you got Pepsi. You do this over and over and over again. This is a very complicated stack to build. And we've been doing it for 3 years. And now we're live here in Pakistan and we're clocking about 100 loans a day and without any sort of human intervention. And now with our partnership with Ant Financial on this, we're exploring all of their other areas of the world, their markets. And surprisingly, as I've studied them, they're virtually identical. But the Dukan stack we've built allows us to create vertical ERPs like the one you're seeing very simply. We've got a lot of experience in fintech. We've got a lot of experience in credit scoring and a lot of experience building mobile apps and sort of e-commerce. So it makes it exciting for us. I'll just show you, this is an example of video. I'll just play it for you of an app this is an EasyPesa app. And this is, in fact, the first loan we ever did. We made a video of it. And this is that video. We've added a bit of music so to just entertain you. This is a distributor for BAT. He got an order on his app from the retailer. The retailer is paying with a credit line. The money's been paid. The goods are handed over. Then we're done. So it's that simple. Now there's so much stuff that just happened in this video that was under half a minute, but that's about how long it takes to conduct this entire transaction, which if you had asked a bank to finance that purchase, they would freak out and probably take about a month or two trying to get house papers for this poor guy. But because we're in this new world and we've got these electronic sort of footprints, there's sort of amazing things we can do. So we're really empowering a segment of society that's being left behind. And that's a mission that's very important to us. Of course, you can make a lot of money doing it, but as you start to interconnect these SMEs with their suppliers and build these networks, you're finding that once these businesses are transacting on a digital fabric, you can offer them an incredible amount of new features and products that were previously inaccessible. You can throw in insurance for them at the time of purchase. You can throw in wealth management tools so that the cash that they have lying around in the till is now earning profit, halal profit, if you will, at 24% So these instruments were not accessible to them before. Now they are. You can throw in more virtual products for them to sell, like, for example, bus tickets, etc. So that's sort of what we're about. And this is not a Pakistan specific play. We started in Pakistan, we've learned from the market, and we've learned that this market is like a lot of other emerging markets. Our cost of engineering stems from what we're doing in Pakistan. So we'll always keep our R&D in Pakistan. We're great at doing what we do. But from here in Pakistan, we're growing to the rest of the world. And we're seeing great appetite right now. So that's it.
All right, cool. So, in terms of your background story, you came to this idea. How did you come to it? What drove you to say, here's a problem that I'm going to fix? Can you share?
The Dukan story, it seems like a startup, we're pre-seed that just started with this idea and launch. It's actually in the making for about 20 years. There's a lot of learning that's gone behind it. You're seeing a fintech wallet. That's not easy to get a regulated play, a wallet in the fintech space. You're seeing lending, you're seeing credit scoring, you're seeing e-commerce transactions, you're seeing, understanding how a retailer in the field works with low internet and a poor handset, and a very deep understanding of a very complex process of how distribution networks work and the various nuances, around that. So Dukan evolved during COVID, but I'd like to just rewind, if you'll allow me. My journey starts in the US, in the Valley, where I was doing my grad work at Stanford. I was working at, Intel, making microprocessor chips. And then I went out in the Valley. I became an entrepreneur. I started making ASIC chips for other clients, and .com wave hit. And I realized, hey, I'm in the wrong space. The world is transforming. So I launched my first internet venture around that time. It was called edaycare.com. We put up webcams in about 3,000 daycares across the United States, and we let parents watch their kids when live web streaming wasn't a thing. We thought we found gold with it. We had some great early investors in those days. There's a lot of history there, including Tony Hsieh and Alfred Lin, who are Zappos fame, the legend now. And eDaycare was eventually acquired by a New York company. And I moved back to Pakistan for various reasons, but one of the reasons was that I studied that the cost of engineering talent in Pakistan was 1/18 of the US. And when I was doing my startups in the US, the main cost component was coming from the cost of my engineering talent. That's where I'd have to raise the money. So I thought I could do things cheaply in Pakistan. So I moved back, started in a small room of my house. And the first venture I launched here was Rozee.pk, which is now the largest jobs platform in the country. Rozee services about 85,000 employers and about 10 million professionals who find jobs and opportunities on that. And Rozee was the first startup in Pakistan to raise a VC investment round. We raised it from DFJ and ePlanet. And so that made a bit of history back then. Rozee's grown tremendously since then. And I've brought in a friend and a CEO over there. I'm still, of course, the chairman of the board and involved with the company as it needs my help. But while we were doing Rozee and, growing this crazy jobs business, the first battle was the newspapers. That's where all the jobs were. And the newspapers hated this online startup operating in a room. So they were very mean to us, very mean. They blocked us out of ads in their newspapers. When our clients would post ads and put our URL, they would block those ads. Microsoft ran a half-page ad in the newspaper. They blocked it because it had a screenshot of our site, disrupting jobs in print. And we won that battle very, very well. Now we're friends with the newspapers. They respect us now. But during that journey, the next problem was, how do you monetize these payments? My sales team was going office to grab checks and small amounts of cash, which was very tough to do, especially all around the country. So I became very interested in the payment sort of revolution. There was PayPal in the US, which was started while I was there. I had a few friends who were co-founders there, and they would beam me $5 from their pilots, Palm Pilots in those days. But the payments I'd seen in the US evolved very rapidly, and it had to be done here. Very hard for a non-banking player to do it. There wasn't a regulatory infrastructure. But what happened was, then State Bank of Pakistan, our regulator, launched a branchless framework for banking where you could now open bank accounts without going into a branch. Seized the opportunity. I was on the board of a bank. We convinced them to make us our super agent, and we launched a startup that I co-founded called Finja. And Finja launched the first wallet in the country on a smartphone. This is way before EasyPesa and Jazz Cash and any of the wallets, and we got approval from state banks. So we paved the rails for what the wallets are doing now, how they do the KYC, how they do the ID card check, and we launched the first wallet. So it solved my payment problem, but what I found was the churn was very high in the wallet play. So it was quite naive entering into the wallet play. We thought, oh, I got a wallet, you can open an account, you can transfer funds, this is great. But we learned that, the acquisition cost was high and the churn was very high. And then the wallet players came in from the telcos who had ridiculous amounts of money and were throwing hundreds of millions of dollars in sort of acquisition costs, which they were churning. They were just hemorrhaging to give them free airtime, right? So to do an airtime transaction, then you get all of these incentives and people started using their wallets. So we figured out that the wallet space was not interesting. The payments on wallets, the transaction fees, acquisition churn, this was not a model that we wanted to play with a very meager amount of investment. You needed like $500 million USD to do this. But what we found that there was a lot of opportunity to lend because we had data. And so we started to give loans to SMEs by talking to FMCGs and their sort of distributors. We used our wallet as a collection and a disbursement vehicle. So we said, we've got this wallet, so now we can take this loan and put it in a digital channel so you don't have this high cost of doing a disbursement, high cost of doing a collection. We still had the credit scoring costs because even though we'd get data on spreadsheets, we'd have to go retailer, do a KYC, see if they were real. There's a lot of fraud in the space. So this is how the Finja story evolved. So learned very intimately over the years, the nuances there and where things could go wrong and where they go right and where the opportunity was. And then COVID came, and during COVID, everything slowed down. And I found that we didn't have much to do because we were in lockdown and my core jobs business had come to a halt. Nobody was hiring. So I spent a lot of the time in the local markets, and I was going to the markets. I would hear from the retailers that, I wish I could do online sales, but they weren't educated. They had newly acquired smartphones. They didn't understand what a server was, what e-commerce was. But they were seeing players like Food Panda and stores that were on Food Panda were still able to get orders. And like, God, I wish I could do that. How do I do that? And I said, well, that's really easy because we've got the wallet, we've got the payment infrastructure. I can build you an app. I can allow you to do sales online. So Dukan was born actually during COVID out of a need. And as we launched it, spent a lot of time with the retailers in their shops, trying to see how they use the phone, what they're able to do, what they're not, how the customers react. Then went and spent a lot of time with their suppliers, sat in these dingy warehouses where they keep everything on the floor and very chaotic way of how inventory is moving and hitting the market, and just kept asking a lot of questions and started to build small pieces of tech and throw it in there and see if it was useful and how it was used. It took time. Finally, we built this incredibly complex stack with various pieces, including the payment wallet, including the delivery, inventory management, the ordering, apps for their riders, apps for their order bookers, the credit flow, understanding how their expiries work, understanding sort of a relationship they had with their manufacturers and all of that. So we built pieces of this stack and started to fit them in, and all of a sudden we started to see that this whole thing works. And we would get small distributors who had maybe 400, 500 shops. We'd throw them on our stack, and all of a sudden we'd see how much value we're able to bring them. And we learned from them. We learned from issues they were having with the platform. I don't do things like this, and I can't do that. How do I do this? And we're able to bring so much efficiency, not because we're geniuses, but because nobody had ever put in a sincere effort to understand their problems. And if you understand IT, these problems are not very hard to fix, but they're small, they're minute. You have to get into, you have to get your hands dirty. So this is sort of how Dukan was born. And so then we had a thesis of the world. And our thesis was that we can give technology to these SMEs who are left behind. They have smartphones now. They can't do much on those smartphones. Let's build vertical ERPs that are easy to use for them and get them into this new economy, because there's a multiplier effect once they start to transact with each other in a digital way. And it's not just a payment. It's not just pay me for my goods, right? It was basically taking their workflow and putting that on a digital stack, because you get so much deeper, you get so much more information and data, and the reliability of that, the credibility of the data goes way up. And for us to score that becomes easy. So I can build incredibly powerful credit scores just based on the footprints of this vertical ERP fabric that we've created. So we built this great thing, and we were sort of at odds with a lot of other players. If you recall, during the VC boom, a lot of money was flowing in. A lot of money came into Pakistan. Over $1 billion USD in investment came in, and about 25% of that, about a quarter of that, went into these sort of B2B marketplaces. We're raising $100 million, $80 million, $30 million. And the thesis was that they would open warehouses all over the country. They would buy the inventory. They would build slick apps for the retailers. They would build this whole inventory control system to give them self-efficiency and their fleet management software, so they could do it much more efficiently than anybody else. And on the back of the huge amounts of capital they raised, they would buy inventory from distributors, put it in their warehouse, then go to those distributors, retailers, and say, hey, buy from me on this app. It's easier, it's convenient, you can order anytime, you don't have to deal with the inefficiency of sort of a distributor. Distributors were very happy to do this because they could sell a large volume of items, although at a discount now, at a wholesale rate, to one party instead of doing all this hard work on the ground. So like, here's my supply. But then the next time the distributor's order booker went to the retailer said, hey, I already bought. Sorry, I'm not going to buy from you. I bought from this other player. And guess what? I bought from them and they bought from you at less than you sold for me. So what the distributor's done, he's traded his margin for a smaller margin. And all of a sudden they're waking up and scratching their head and saying, hey, wait, what just happened here? So now it's very clear to them that they're going to lose what they're doing. They've become a commodity, and these sort of marketplaces that are buying from them today may not buy from them tomorrow, So our thesis was, look, there's a huge ecosystem here. It's very old. It's well established. Yes, it's inefficient, but it works. It works well. So let's empower the existing ecosystem. I'm going to give you the apps. I'm going to give you the ability to manage your inventory and your order bookers and riders. I'm going to give you the apps to let your retailers order from you. I'm going to give you the power of a wallet so you can get all the payments without the cash hassle. I'll do scoring and lending. And when I lend to your retailers, they're going to buy more from you. You're going to grow, and they're going to grow, and I'm going to make a small piece in the middle, and everybody's happy. This was a very draconian, dramatic South Pole view of a world where everybody was focused on the North Pole. And then we kept evangelizing this, and I think a few people started to pay attention to what we were saying, and we found a lot of appetite with Ant Financial, because Ant has actually this whole playbook has played out very well in China. So when we're talking to them about what we think and we found, they're like, oh yeah, that's what we did in China, that's what we did here. So their investment on the ground was easy pesa and very smart, progressive team. So we told them what we're doing. They got excited and they said, look, we want to do SME loans and we want to build a stack. We've been trying to build it, but we can't. You seem to have cracked this. And we said yes, and we partnered and we launched the app that you just saw, which is a white labeled app where we have a partnership. Now, all the lending that happens on it, we get a revenue share of the lending, and we keep enhancing that. And on that stack, you're going to see very soon the ability to send a unified QR code on that app. So any retailer with our app will be able to accept payments from anybody in Pakistan, irrespective of where they have their accounts, by scanning that. So now I'm getting the retailers' B2C sales also in the wallet, and the retailers purchasing from their suppliers from the wallet, and they're taking credit from the wallet. And now to repay that credit, I can just claw it out of the B2C sales that they're doing. So they don't really even have to do any work. This whole ecosystem has become sort of a digital ecosystem. So that's sort of the evolution of how we got here. It was a very step-by-step journey based on successes and failures of the past that allowed us to do this very quickly. When we went live with Easy Pesa from start to finish, it took us 2 months. So we managed to do this entire thing in 2 months. And they were amazed, but it's not really 2 months. As I told you, it's been like 20 years in the making.
That's an amazing story. I mean, the way you've taken us through to where you've got to. And I'm also listening to what you're saying and comparing it to the stories that we've heard from other regions. And so, I mean, you met the co-founder for Hishabi, for example. He's based in Bangladesh. There are similarities to the story that he's trying to address. There's the startup that both me and Rozee are familiar with in Bangladesh called Priyo Shop. They're doing something also very similar. The problem statement is the same, like pretty much, and kind of cracked it in terms of leveraging the entire existing work framework that you've got, and you've just digitized it. So it means that basically you're increasing the velocity of money, which is great, and all the boats within that framework and ecosystem rise with the tide. So I think it's great that you're bringing everyone along. There isn't really a loser in this scenario. At least I don't see one. It's like the manufacturers get to see it, the FMCG guys get to see an increase in velocity. Distributors, the existing distributors, get to see an increase in velocity of transactions. The retailers get to see an increase in velocity in terms of how they go about ordering and procuring. And then on top of that, the loans, it's freeing up the cash that typically would hold everything up. I can't sell this because I don't have the money to buy it, and I'll need to sell something else and then I'll buy it. And that slows the entire economy down. And like you've mentioned, it's a substantial part of the economy, and it's often overlooked because each individual retailer doesn't mean much, but when you add them all together, it's a significant chunk of the gross domestic product of that country. And like what we're seeing as well, the reason why we were really interested in what you're doing is because we've seen India, Bangladesh, Myanmar, Malaysia, they're all doing something similar. The problem statements are pretty similar, and it's a real massive solution that you've got here. So yeah, I mean, for me, really see the value in what you're doing, and I think the story that you've taken us through also really underlines like the kind of problems that you face to actually get to where you are.
I was going to say, it's like the makings of an excellent book. Once you bring Dukan to the success that you aim to bring it to, right? This is going to make for an excellent book.
We just hope the book has a happy ending, so that's often the unknown when you start to read a book, and the book is still a piece of work. Yeah. It's still happening. It's ongoing, but we're very optimistic.
Yeah. I mean, originally, when we were looking at some of the problem statements in Bangladesh, some of the issues that they had were, even though the mobile phone penetration rate was really high, smartphone penetration within that particular demographic was very low. And that held back companies like ShopUp and PrioShop because, hey, we've got this great big tool, and they're like, yeah, I've got a phone and it's a Nokia 3210 or whatever, and they're still using it because that's all they need. I make a phone call and that was that. How's that worked for you in Pakistan in terms of the demographics and the smartphone penetration and people understanding how to use a smartphone? How is that different? Is it still a problem?
It's a great question, by the way. At various stages in various geographies, some are more advanced along the journey and some are earlier. And the ones who are more advanced had a period of time when they were exactly like the ones who were earlier in the journey. So if you look at a lot of these sort of marketplaces who are selling to the retailers, yes, they've got apps that the retailers can order from. Something like 20 to 25% of the retailers have the sophistication, take the effort to self-order, navigate the app. So they're your early movers. The early movers today, 5 years from now, they won't be the early movers. Everybody will have mastered this sort of a technology. So you need to make it easy. So to make it easy, we made sure they had offline access so that even if their internet wasn't working, you could basically do everything and it just resyncs the moment internet comes. We've made it light on their handsets because, even though they do have smartphones, they have very cheap, often used smartphones. They don't have a lot of space, so they can't put a lot of apps on it, right? So you have to be very small footprint, and the app better be important, otherwise it's getting uninstalled. They install a lot of apps and they uninstall a lot of apps. So there are a lot of nuances like this, but what's interesting is that we realized this early on, right? So we said, well, your order bookers do have apps and phones. So if the retailer isn't able to self-order from this app, which if 20-25% do, you get a big win because your order booker no longer needs to drive all the way to their store and spend that fuel cost. And this is what slows these guys down because the cost of order bookers inhibits the footprint that they're able to serve. So if you can free them from that, they grow faster. But the order bookers also have an app. So a lot of the order bookers are taking orders through their app. And if you look at the marketplaces, they've got a guy going, asks him to open up his phone and they order for him on that app, right? So there's a lot of that sort of behavior going on. So realizing this, we said, well, your order booker is going to come anyway. If this guy isn't ordering from you on the app, don't worry. The order booker can take that order through the app. It's going to the same place. If they self-order, it's going to the same place. And with time, surely you're starting to see a massive increase in the number who can self-navigate those apps. In terms of penetration of smartphones in Pakistan now, about 68% of adults have internet-connected smartphones. And I've been studying various places in Africa, but it's looking like, Africa was a little bit behind. It was way ahead in terms of wallets because they use USSD, and man, did they use it well. USSD works for everything in Africa, and maybe it worked too well because I think because a lot of the problems were solved, there was less urgency to go and buy an app and install an app because you could do all your banking and stuff on your USSD. But now there's a major push in Africa. The numbers are north of sort of 50% on smartphone, but that push is incredibly aggressive. So a lot of African nations, you're finding that the growth of smartphone is extremely fast. We're talking to probably the largest telco in Africa, I won't name them, but they're seeing a massive push towards smartphone, and all of their USSD applications are now moving to smartphone applications. Another huge opportunity, by the way, right? For if you're like an app developer or like fintech app developer, the whole world is, or all of Africa is now moving their USSD applications to sort of smartphone based. So that's definitely happening. The world is progressing very quickly, and we even talked to this sort of telco in the interim, building a USSD interface on this whole platform we've built. That's equally easy. It's another channel. We already have a WhatsApp interface to this. So if you don't want to order through a smartphone, we've got an AI chatbot that lets you order in your local language through a conversation. So these are channels on the end of it. We're banking that eventually it's going to be that smartphone. But meanwhile, whatever channel you need, we'll plug in your USSD, we'll plug in sort of your WhatsApp, we'll plug in your order booker into the same sort of a fabric. So a lot of ways to do it.
Wow. I mean, yeah, and I remember a very early stage of a similar company in Bangladesh. They literally had to send people out with their mobile phone and take it to the retailer and say, what do you want to order? I'll order it for you. And then go on to the next shop and order it on their behalf.
That's what the order bookers do. Exactly. So that's exactly. Now the order bookers used to do this on a napkin. So they would take these orders on a napkin. We gave all the order bookers now an app so they can do it on the app. But yeah, exactly right.
Yeah. I mean, and that's slowly changing. But and as a foreign investor and not understanding the problem statement, when I heard this, I thought, this is insane. Like, everyone's got a mobile phone, everyone's got a smartphone, and it just isn't the case. It's something that really takes a moment for people to step back and realize that there are significant challenges to deploying tech in certain countries with certain demographics, and we have to keep on reminding people of that. When sometimes when we're talking to potential angel investors, they're always saying, "Oh, I don't understand the problem statement. This is just dumb." You know, like this is so easy. There's nothing special about this, and you think actually it's revolutionary, and it's really changing the way people do things. And unfortunately, people don't have that there, especially in Southeast Asia, in Singapore, Malaysia, Hong Kong, Vietnam, all these places. The expectations are very different. The smartphone penetration is very high, and adoption is very high.
If you just allow me, Usman, to just add in there, when Uber launched here in Pakistan, I've been doing online stuff for a long time, but I saw this tremendous scale through Uber. And I was just amazed at how this company had gotten so many drivers to buy smartphones for the first time, learn how to use maps, which isn't easy, and all of a sudden service this whole economy. And I was just flabbergasted at how quick these uneducated people, they rushed to buy expensive smartphones. They found out ways to keep the batteries charged. They learned how to use a mapping system, and they didn't really have a lot of education going on. And what I learned was that if you give people a use case that helps them increase their livelihood, they're actually pretty intelligent. They're going to figure it out. And the problem with our economies, we don't build those use cases for them. So then, why will they buy a smartphone? Well, you can go and watch YouTube. Okay, it's a good reason. But the moment you build these applications that are relevant to them and allow them to get more efficiency, save money, make money, all of a sudden you see this adoption grow. So it's a chicken and an egg problem.
Yeah. No, absolutely. I mean, the other, going back to your Uber point though, I mean, when I went to Bangladesh and I used Uber there, and I was like, oh great, I don't need to use Grab. This is great. And I'd order an Uber, and then the car wouldn't move, and I'd be waiting and I'd be waiting and I'd be waiting. And then eventually somebody told me, no one's going to come to you until you give them a call. And you have to call them and go, this is actually where I am. So even though they use the maps weren't 100% reliable in places like Dhaka. So they wanted you to phone them up and say, I'm actually on the corner of this street here and blah, blah, blah. And then they'd come and find you. Even though you'd like dropped a pin, they wouldn't do it. Those kind of nuances you won't realize until you actually step foot in a particular country. And that's usually my advice to people when they're interested in a particular geography, that if you want to understand the problem statement, go to the country and experience it and live through it. So basically what we've done.
I think soon you need to start organizing the clueless capitalist tours to Pakistan and to Bangladesh.
But we're just itching for a reason to come to Pakistan and Bangladesh.
Actually, Monis was sharing that they're already doing like 100 loans a day, right? How does the growth path look like in Pakistan for Dukan? You're on mute, Monis.
When I say 100 loans a day, we're not happy with that number. It's very small right now, but it's fast compared to how quickly we're able to do it online. Because we've onboarded one FMCG and we've whitelisted 3,000 of the merchants right now. And because we just launched a month and a half, 2 months ago, it's clocking at a certain speed. They're about to whitelist 13,000 more. So we're going to get a 4x increase in our orders. This is just one FMCG we're playing with, and mainly around the Islamabad region, right? Once we do those 13,000, then we open up all 100,000. One FMCG. So, scaling from 100 loans a day to maybe 1,000 loans a day we'll be doing that with this one FMCG over the next maybe 2 months or so. But now the next FMCG we're adding, there are other ones. We're live with sort of BAT here. There are lots of other big ones. I probably shouldn't name them now because this is going to be shared. But the large ones you've heard of, the moment we add 1 or 2 more of those, you see a sort of very, very steep rise, right? So now you're looking at 5,000 loans a day. You're looking at a universe of, about 800,000 retailers. If you get the top 2 or 3 FMCGs, you get, the Unilevers, the Pepsis, the Coca-Colas, the BATs, you pretty much have 80% of the entire universe right there, right? And then if you start to get the smaller ones and you get the pockets, but your cost doesn't go up. If I get one FMCG with 3,000 retailers and I get an FMCG with 300,000 retailers, my cost hasn't gone up. It's the same fabric, it's the same tech. This model was very carefully engineered to keep our costs low. We don't have inventory. We don't have a delivery fleet. We don't have order bookers. We don't onboard the merchants. Our partners do all of that. We don't even give the money for the loans. Our partners give the money for the loans. But because of this software fabric we're able to build, we can have a very low footprint, a low cost base, and the leverage across of it is sort of massive.
Amazing. So in terms of the metrics that matter, what are you tracking at the moment? I mean, what's important to you? You've mentioned 100 loans per day you're not happy with. So is that the metric that you're tracking as primary, or is it number of retailers that are onboarded? What are they?
Well, the number of loans a day is the sort of the endpoint where you're trying to get to, and it has a lot of implications, right? It implies that you're onboarding retailers. It implies that they're becoming active. It implies that they have learned to use the payments on it. And it implies that the distributor and the retailer have a connection that's transactional and not just both have your software. So the best metric that I like to watch are the number of loans we're clocking a day, because that's also the value I'm bringing back into the ecosystem. Yes, I've automated the operations of a distributor. He's thrilled because now he can do things more efficiently. And yes, I've made it easier for the retailer to buy, and the FMCG is happy. But the real value is the credit. Now the retailer is able to buy more. He's able to sell more. He's able to make more money. And as a consequence of that, I'm able to monetize the value I've created through my margins on the loans. So that's actually the metric. If you look at any bank today, everybody's saying the same thing. These consumption loans that they've been addicted to, consumer loans, these are good, but it's a commodity product. It's not scalable. Everybody wants to figure out how to get into SMEs. And it's not just giving loans of SMEs, right? So a lot of banks are like, well, I'll place my POS machine there, and based on the transaction of the POS, I'll start to give cash to the retailer. Well, guess what? The moment you give cash, you're in trouble, because when people take cash and they go and buy like a motorcycle or a TV or a gift for their girlfriend, they're not as incentivized to return it. But if they're using that loan to buy inventory that they sell and they make a profit on, they're not going to screw over your loan because you've helped them make more money and they want to keep doing this. So building tech that goes much deeper into their workflows and adds value and connects them with their suppliers, this becomes something that's very hard to disrupt and to uproot. So now another bank can't say, hey, I've got a POS machine and I'll give you a lower MDR, use me instead. It's like, wait a second, I'm doing all of this stuff. I'm buying, I'm selling, I'm getting loans through it, I'm getting credit. So the SME lending strategy, which everybody in every emerging market, every bank is trying to figure out and hasn't yet, and and they realize this is the most strategic thing they can do, that they need to do, not just because their board is telling them, because the countries are telling them that you idiots, you aren't giving SME loans. You need to give SME loans. The state banks are telling them, and they're under pressure to do it. So as a backdrop to all of this stuff that we're doing, which I really believe strongly in, we've had this sort of tailwind from this entire ecosystem where all of these banks are just, trying to figure out how to do this. So we've got so much inbound right now that we're fielding, and it takes a long time to work with banks. So there's a certain engagement sort of process and cycle, but the appetite we're seeing is unprecedented, and we're very grateful for it.
Right. I mean, my only comment would be, if I was to play like devil's advocate, when you look at Pakistan in particular, everything's like cash driven, and the reason why it's cash driven is I don't want to pay tax, and I don't want to do this, and I want to do, if there's a way to circumvent something, Pakistanis, in my experience, will do it, right? And so I don't feel I'm talking out of turn. It's just from experience that I've seen. Like, you could have something that really benefits you, but there's something cheaper and quicker and faster. And look at me, I'm breaking the rules and I'm doing it for the sake of doing it. I mean, is that something that you're experiencing now, or has the mindset changed?
Yeah, no, you're right. There are a couple of things, so when we started off, this was the main enemy. The cash was the enemy, but the enemy of cash was taxes, right? So,
yeah.
So it was a big concern. And when we talk to retailers, they're like, oh, if I use this app, are you going to share this with the tax authorities? Will I have to pay back taxes? There's a lot of fear that's going on. And with time, all of these retailers opened up wallets and they're already doing online transactions. It's almost unavoidable, right? If you want to keep moving along with this economy, you're going to resist it. But at some point, the convenience and the interconnections that this ecosystem offers is going to far outweigh any taxes that you'll pay. So you're going to find out that you're making a hell of a lot more money because you're able to adopt this new technology that allows you to sell more, broaden your reach, footprint, get credit, get efficiencies in your purchasing. That whole fear of tax eventually goes away. It's not gone yet.
Yeah.
But one of the biggest indicators on this is the growth of digital transactions versus offline cash. I watched this number very carefully, and I've got a graph. I don't know if I can share it with you right now, but it's an exponential hockey stick curve on how quickly in Pakistan digital transactions are replacing paper transactions. We've had a 9x growth in the last 3 years. And there was a study out just earlier from State Bank that for the first time this year in Pakistan, digital transactions are going to exceed cash transactions.
No way.
This is big. So just process this, right? Everything you're saying is correct, but proof is in the pudding. This economy is moving online, payments are moving online, and we haven't even started with this stuff that we're doing, right? This is just brand new, it's just launching. This one QR, this unified QR retail transaction, this QR code, instant ROS, instant payments, equivalent to India's UPI, and in Brazil you have PIX. The moment those schemes launched, you saw that the digital transactions, which were growing, all of a sudden saw another hockey stick. ROS P2M transactions, the unified QR code, is now live, and it's going to be all over the market within the next 4 months. And we're plugging that into our app. So amazing things are happening. It's happened again and again and again. Just study the growth curves in India. India has the same issue. Nobody wants to pay their taxes in India to Indonesia, Brazil. It's happening over and over again. We're seeing it happen in Pakistan. I'm looking at those numbers real time. I'm looking at them real time, and I'm seeing this curve happening.
Okay. I mean, and in terms of the stuff that you're tracking, I know the loans per day, but in terms of GMV, revenue, how are you tracking at the moment?
Yeah, great. So, because we've gone live with EasyPesa with just one FMCG, which happens to be a tobacco product, our data is very skewed around that one product. And based on what product you sell, the loan behavior, the average loan size, the loan sort of cycle, all of that varies. So tobacco products are very interesting because they sell very quickly. So you can spin them around in 1 or 2 days. Like they're buying every 2 days because they're just spinning so fast. So they're taking the cash, reinvesting it, buying again, reinvesting it. And there's a constant sort of cycle. The basket size is smaller. So our basket size right now is somewhere around, for each order is something like $20 or $25 an order. That's because they're smaller, more frequent, but they're doing that every 3 days.
Yeah.
Now, the moment you move into another product, for example, if we go live with a large FMCG in the foods getting, like maybe soft drink and chips and, milk and stuff like that, you're going to see the basket size all of a sudden jump up about 5x. So it'll go to about $100 an order. And when it goes to $100 an order, the ordering time goes to about 2 weeks now, because it takes about 2 weeks to flush it. It can be 1 week. So all of those numbers vary, and our scoring algorithm, our algorithms are very sensitive and tweaked around these sort of parameters. How much of a loan I can give and should give. So remember, when I give a loan, I don't just give a loan. I give a loan against the basket that they're purchasing. And the basket that they're purchasing, I correlate to the historical purchases of those same items. So if he has been buying $100 worth of a certain product mix every month, and 1 month he wants to buy, 5 times that, that's an anomaly. My credit scoring algorithm is not going to hand him credit for all of that, right? Until I see that uptick. So the basket size is going to vary as we keep expanding. It's going to vary across geographies. As we go live in Africa, you're going to also see a similar sort of dynamic. The basket size is linked to the GDP and, the cost of goods in that sort of market. But it doesn't really matter, because as you clock up these volumes, you're getting a percentage of that. So you can basically correlate that GMV back to a percentage, back to sort of your net margin.
It looks like the Pakistan growth story is definitely going to happen. What about bringing this tech out of the country?
So that's exactly what we're doing. We are now in very deep conversations, hopefully should have some good news soon, with a very large sort of telco in Africa, which would put us in, I think, 8 of their countries. A beautiful footprint. It fits exactly what we've built here. It's a hand-in-glove fit. We're talking to players in the Philippines. We're talking to players, Africa again, in Morocco. It's North Morocco. There's some conversations happening in Saudi. So we're very much focused on taking this exact same tech stack and plugging it into large partners in a partnership model like we've done here on the back of other platforms, where we don't have to increase our OpEx. We basically plug it in. And because our partner has this sort of footprint already on the ground with retailers, they've got the wallets, they've got the licenses, it just works. So very much the intention of now expanding this internationally. And we get another kicker there, because our cost is always in rupees. We're based here in Lahore. Got an amazing engineering team. So we keep growing our OpEx here in Pakistan in rupees as we expand in these international markets. However, the pipeline for other players in Pakistan is also equally large. So it's not like we're abandoning the market in Pakistan. There are many other players that we're now in conversations with and at various stages of sort of doing a rollout of permutations of the stack, I'll say.
I think really that's all very exciting stuff, right? I mean, from what we've heard so far and what you're going to be, how you're going to be growing, I think this is really the round that we're trying to raise for, right? You could tell us about how much you're looking to raise and how much you've raised so far, and by when do you want to close the round?
So we're profitable. We became profitable in May, and I had conversations with you guys in Singapore. We were really not in the funding circuit, but now with all of these deals, we realized getting a small cash injection would be helpful. We think it's a great story now. It's been de-risked. We are profitable. We're not in an existential crisis. If we don't raise the next round, we'll ever have to close our doors. We've been through that before. We've navigated it. We've undergone a hard time. We raised initially, we raised a very small pre-seed, and we raised it because it was so easy to raise in those days. It wasn't even a very intentional raise. So we raised about 1.4 million, mainly from one fund, from GFC, about 2 years ago or 2.5 years ago. We haven't raised anything since then. So we've been fortunate. I'm glad we didn't raise, because we still are in control of the valuation, which just went out of control over the last 3 years over these. So a lot of small startups now are valued at $50 million. That's just completely unrealistic, and they'll never be able to exit at those valuations. So we were safe from that because of, the implosion in the funding circle. Yes, it was hard for us, but we've navigated through it. We're a very strong spot. So right now we're looking to raise, no more than 500K maximum. And these funds are going to be deployed to operationalize our expansion into these other markets, which, as I explained to you earlier, is not a lot of capital that we need, but it could certainly be helpful, so we're not stretching ourselves, breathing for oxygen as we're trying to grow.
So that 1.4 million, what was that raised at? Can you share the valuation?
It was raised on a safe note, but it's, if I go back to the equivalents, it was our first pre-seed. We didn't have anything, so it's roughly, it would be on a 4 million like valuation effectively.
Okay, and this new 500k, that would also be on a safe note, and I'm expecting the valuation cap would be a lot higher from.
Well, yeah, well, I mean, obviously, because now we're de-risked, we're profitable, we've got good traction. It's still, I mean, you know, if I wait another 6 months to do this, if I'm saying I'm doing 100 loans a day, in 6 months, I'll be saying I'm doing like 1,000 or 3,000 loans a day. And I've got so many more FMCGs and I've got a deal signed, you know, so obviously we think the valuation is going to grow very quickly. We don't want to play that valuation game and keep raising. You know, I want to raise a small amount now. I want to get the cash flow coming in, because this is, I mean, cash flow starts coming in quickly. Once you're profitable and you're on this platform, then it's basically, as it scales, you're just an ATM machine. So we'd like to raise a small amount now, and then, you know, maybe we raise again in the future if we need to, but hopefully with, you know, 3 or 4 of these deals across geographies, we should be in a pretty good cash flow sort of situation. So, you know, the amount we're raising now, you know, happy to, you know, brainstorm that. Don't have a fixed number, but obviously it's going to be quite a bit more than our first pre-seed round when we just raised essentially on the back of a napkin.
What does the exit look like?
The exit? Yeah. So, you know, I've been thinking about that a lot. And so I'm an entrepreneur. I've been doing this a long time. And, you know, the exit, I know it's important for investors. You know, when do I get a multiple of my investment back? For me, I've always seen it as, you know, how quickly can I create a business that's very profitable? And then the exit is like a secondary problem. So we want to get very profitable very quickly, where we're churning out a lot of cash. When we're churning out cash, obviously you can start to give cash back out to investors as well as your sort of your dividends. But certainly this is something that a lot of banks and wallets globally are super interested in. And as we prove out this model, I'm sure there are going to be multiple financial institutions in various geographies that would just like to scoop that up, either for their own internal use. Maybe the partners that we're talking to right now, maybe a third partner will say, hey, I can move this into a few other geographies, or this is what needs to be built. And the fact that we are going to be dollar denominated as we internationally expand also takes that whole country multiple risk issue and turns it into an asset instead of a liability, because now my expenses are parked in rupees, and that's a good place to have your expenses parked. So I think, you know, it's a fintech, it's an e-commerce play, it's an SME play, it's a platform play. The multiples will be very high because our OpEx is much lower than the amount that, you know, is going in. I was seeing a few regional players who are specializing in sort of lending and credit scoring tech platforms, like there's OptAsia and a few others that you may have heard of. In fact, OptAsia, I think, is gearing for an IPO right now. So they're going to be, and they don't have that super rich stack. They're doing the credit scoring piece, and they're plugging into other platforms. So I think you know, it should hopefully provide a very interesting exit, but very hard for me to predict where and when that will be.
So with regards to the 500,000 investment that you're looking at, I mean, it's very clear that this is just to kind of open up liquidity, get you to move quicker with your own deals. It's a great position to be in because you've got the deals and you've got the deal flow, and all you're needing is just a little bit more liquidity to give you the wiggle room to do more. So normally what we would look at is look at the data room, look at the details behind what you're doing, and then we would look to invite people on a closed basis. We can't actively go out and solicit people to invest in the company because that breaks a number of rules, but we do have like a closed group of investors that we would share that information with, and we would talk that through. And so just to people watching the video, I mean, if you're interested to understand how syndication works, you can sign up to our LinkedIn site, and we can talk to you a little bit more about how syndication works and how this type of investment mechanism works. We're not actively soliciting the public to come in on this particular round, but we're more than happy to educate and inform people about how that works. And if you're willing to join the club, more than welcome to. And then within our own closed investor network, we would look to see whether people are interested in clubbing together and coming in on the round. So
thank you for making time for this wonderful chat. Monis, I think what you built and what you're working on is super exciting. I look forward to reading that book a couple of years down the road. So if you enjoyed,
hope you'll have a happy ending, Rozee.
I have full confidence.
Thank you so much, guys. Always a pleasure speaking to you guys. So, and now we need to see you in Lahore, please. Really, honestly, it would be a pleasure to host you here.
For whatever.
Yeah. Nihari and more.
Nihari and more. I mean, I've already mentioned it to Prelia. It's like, oh yeah, we could go in January, and like I was thinking, yeah, that'd be good to do that on the way back to the UK. Perhaps I still don't have a job, so I got loads of time on my hands at the moment.
Maybe you could lead the Dukan's charge in Africa.
There we go. Absolutely. Let's raise some money and get you a job.
Yeah, go out to on the channel if you're looking to hire anybody. I'm your guy. I don't care what the job is.
500K, which will essentially just pay Usman's salary.
Cool.
Thanks, guys.
Yeah, no, thanks, Monis. It's been an absolute pleasure and always fascinating to hear this type of story. And what you've done, where you've articulated it, is amazing. But also what you're doing is phenomenal. And so, yeah, I sincerely wish you the best of luck. So I think.
Thank you so much. That means a lot. I'm grateful for that.
Yeah.
Thanks,
Cool.
guys.
All right.
Speak to you soon, and we'll be in touch. Great.
Oh, brilliant. Thank
Bye,
you.
guys.